What's up, everyone? So this video is on tax, and what you've got in front of you here are the current tax rates for Australia. That's based on 2020 to 2021. To run through each of these by giving an example, and the first example I've got on the right here is if you've got an income of 17,000. So to work this out, we need to look at this number here, which is the $17,000. That's how much you've been paid as an individual in the taxable year. So that's from July to June, from July 2020 to June 2021. You take that number and you bring it over here to this left-hand column, and you work out where that number fits into on here. In this case, it's very, very easy for this one because it fits between $0 and $18,000 per year. What you then do once you've worked out which of the rows it's on, in this case, the first one, you look at the tax on this income, which is the column to the right. In this situation, you're paying nothing, so nil. That's your tax that you have to pay on your income, which is pretty good. If you earn $17,000, your tax will be zero. With example 2, we've now got to look further because we've got an income of $32,000 per year. But again, we're looking between the two figures here. So we've got 18,201 to 45,000, which is this what it'll fit between. And then as the incomes go up, so 45,000 to 120,000, 120,000 to 180,000, and 180,000 and over, each income you get, you'll be looking within one of these rows. In this case, we've got this blue row here. So what we have to do in this situation is work out the figure and then calculate that tax based on the exact income we're paying. So in this case, it's 19 cents for each $1 over 18,200, because that amount we don't pay tax on. So to do the math on this one, we will get our 32,000, and then we are going to minus this number here, 18,200. And that will give us a figure of $13,800 that we are paying tax on. And that means that we've got 19 cents to pay for $13,800. So again, we've got to do some math after this one. That will be 13,800 times 0.19, which, so 19% really is what we're doing because it's 19 cents per dollar. So that number comes to $2,622, and that would be in tax that we would pay. So again, to work that one out, we've gone our income here, which is $32,000. We minus the $18,200 that we don't pay tax on to give us $13,800. We then take that number and we will times it by the amount of tax that we would pay. In this case, it's 19 cents for each $1 over this amount, leaving us with $2,622 in tax. So what that would look like then, that with our income of $32,000, I have to move this up, sorry, my face is out the way. Income of $32,000, that's our taxable income. We will be charged $2,622 for that year in tax, which would leave us with a net income of $29,378 per year. So that's having this number, taking this amount of tax away and leaving us netted with this. And if you remember from class, this would be our gross income here. So that would be with this second tax bracket that we're paying, probably one of the more common ones for most people. Now let's look at example 3. So this time we've got an income of $78,326. So $78,326 per year. So now we're starting to go with numbers that aren't dead even. So it's where we really need the calculator just to make things that bit easier. This one falls within this third bracket, okay, because between $45,001 and $120,000. The difference now, though, is that we've got a number that they're going to give us worth of tax that we have to pay before anything else. But we still will work things out in a very similar way. So we'd start by having that number here, that's 78,326. I'll use the dollar signs and commas this time so it's worked out. So it looks a little bit cleaner. And we take this number at the end, 45,000, and we'll take that away from it. Because that much has already been taxed for us. Like this one was already taxed, even if we didn't pay anything on it, it's already been taxed. So we're taking that number away, which equals, if you got your calculator, $33,326 that we still have to pay some tax on. So let's take that to the next step. We're paying 32.5 cents for each $1 over this amount. That's the amount we're doing. So this time we've got 33,326, and we will times that by 0.325, which would give us a number of $10,830.95. Now, the difference here with this lot is that we have to actually add it to that original number that we've been given, which we did previously, but the number was 0, so, it was quite easy. So in this case, you've got $10,000, 830.95, and we will add that to our number of $5,092. That's taken from here. So it's $5,092 plus 32.5 cents for each $1 over 45,000, which we worked out was $33,000, because $78,000 in total is what we earned. That will leave us with a grand total of $15,922.95 paid in tax. Quite a lot of money when you think about it, and that number will fall into this category of tax because that's what that part is. So we go back to our original income here, $78,326, and we'll put in 0.00 because we weren't paying any cents on that one. We then take that number, we take this number away, and that would give us our net take-home pay, which is $62,403.05. So $62,403.05 is what we end up with after the financial year. And obviously, if you're getting paid weekly or fortnightly, you would divide that by 52 or 26, and you'd work out what your net income would be weekly or fortnightly, etc. So that puts us into that second bracket. And to run you through example 4 real quick without going through it one at a time, this time your income is $124,901.71. So a bit of a bigger figure here with some decimal points. We've got our taxable income minus the bracket that we're in, $120,000, which leaves us with this amount. We times that by 37 cents, leaving us with this amount. Then we add those two together. We add that number to the number we've already got here, the 29,467, leaving us with this amount of tax. We would then take that amount away from this original gross income we've got, leaving us with a net income just over $93,000. And for the final example, which I won't run through too much, but you can see even if it's just that tiniest bit, in this case $2 over that amount, you still have to pay in the higher tax bracket, which is why it's handy to be claiming things on your tax, which we haven't done in this video. Only ends up being 90 cents plus this $51,000, but you can see there your gross income of $180,000.02 ends up with a net income of only $128,334.10. So I hope that this gives you a good insight into how this works. Remember, you've got to look at which of the rows that you fall into, looking at the left-hand column first, and then work out on the right-hand column which bracket, what amount of tax you'll be paying based on these numbers. Good luck with it, and I'll see you in class.